Hi everyone. In this video we will talk, is Bitcoin better than gold? Bitcoin the new digital gold. So before starting this video, please like it and subscribe to our channel for the future updates. Let's begin. Gold has always been regarded as a safe haven for money. The fact that governments keep a gold reserve is obvious proof. They do so because gold is the only currency that the losing side can use to buy things in a war, because government promises are worthless in extreme situations, and only gold can be used to settle debts. A lot of gold buyers are in the same boat. They are willing to trade their paper and electronic money for a metal that is difficult to counterfeit because they do not trust promises made on paper. As a depositor of gold in the United States discovered when they were repaid in gold bars made from coins rather than allowed to redeem the pure gold bars they deposited, gold can be faked or diluted. Nonetheless, skullduggery aside, an ounce of gold is an ounce of gold, or so people believe. There are a number of peculiar aspects of gold that make it difficult to invest in, many of which are related to security, but fear of loss isn't the only factor that makes gold hoarding difficult. Gold is worth about $60 million per ton, and as such is an awkward asset to store significant wealth in, despite the fact that most of my readers might consider it a quality problem. If you're a billionaire trying to protect yourself from a major disaster, gold isn't going to help much. If the asset's purpose is to protect the owner from war or other forms of predation, even a 100-pound asset is awkward. A haven asset should ideally be light in weight because, as the Indians say, wealth is only what you can carry when the chips are down. Of course, this is an extreme viewpoint, but gold enthusiasts are frequently those who hold extreme viewpoints, and extreme times come and go. Gold buyers use the metal to protect themselves against extremes such as inflation. Again, as in the United States in the 1930s, owning gold is no protection if gold ownership is outlawed and individual stocks are rounded up on the threat of imprisonment. Gold, on the other hand, isn't just bought as a safe haven. Many people who are worried about the future buy it because they believe it will appreciate in value. Gold is a very popular speculative asset, and many people buy it in the most uncommercially expensive way possible, such as through jewelry, in order to be exposed to this risk. Whatever the case may be, gold is an investment, and most people who purchase it do so in the hopes that it will appreciate in value. Few people purchase gold expecting it to depreciate in value. Gold, on the other hand, has stubbornly refused to rise significantly regardless of what happens in the global economy. It has not lived up to the expectations of many of its supporters, who expected it to rise by many multiples. The best it seems to be able to do is jump $100 or $2 if something nasty happens somewhere on the planet. To make matters worse, Bitcoin and other sister cryptocurrencies have been developed, and they have begun to encroach on key gold use cases such as flight capital and safe haven investment. This isn't necessarily a bad thing for gold, because if more people see the value of investing in haven assets like Bitcoin, they'll be interested in other assets that provide similar protection. What works for Levi's also works for jeans, as the saying goes. Both cryptocurrency and gold have fervent investor bases. There are, however, significant distinctions. Bitcoin is 10 years old and has only existed in one monetary regime. Gold's history as a basic building block of global money is 5,000 years old and time-tested. The price of Bitcoin has a standard deviation of 75%, making it a terrible store of value. Companies are tempted to include Bitcoin on corporate balance sheets to help grow assets in excess of corporate performance, as recent price history shows a large bias towards speculative interest. Cryptocurrency is a poor substitute for money. In the United States, voluntarily disclosing your cryptocurrency profits is required when filing your taxes. If a crypto trade, like a brokerage transaction, automatically generated an IRS statement, the speculative outlook could deteriorate. However, there is a simple reason why safe haven investors who invest in Bitcoin have more upside than those who invest in gold, and that reason is issuance. Gold has traditionally been used as a hedge against inflation due to its scarcity. It reached a new high in August 2020. Governments can debase their currencies by speeding up their treasury printing presses, but miners can't flood markets with gold, according to popular belief. The fact that Bitcoin is not controlled by governments or their monetary policies, and that its supply is even more strictly limited than gold's, contributes to its appeal. With the massive spending by governments and central banks in response to the pandemic raising concerns about inflation once economies recover, Bitcoin as digital gold is receiving more attention than ever, even as inflation remains low. According to JP Morgan Chase & Co. strategists, if Bitcoin attracts the same amount of money currently invested in gold, it could rise to a theoretical price of more than $146,000 in the long run. Bitcoin, on the other hand, has attracted a wide range of investors, including billionaire Elon Musk and hedge fund titans Alan Howard and Paul Tudor Jones. Prices have more than quadrupled in the last year, reaching $52,000 this week. On Thursday, the digital token lost 2% of its value, trading at $51,317. Every year, an additional 3,300 tons of gold is produced. Call lets it $200 billion in new gold which must be absorbed by buyers. Because gold recycling equals consumption, new mined gold is surplus. It's a good thing there are 8 billion people on the planet who all want gold because it only takes about $20 per person per year to deplete the supply. That is reflected in the price. As a never-ending supply of new gold is injected into the market, there is no apparent downward trend in the price of gold. It is well received by the global economy. Let's take a closer look at Bitcoin. Every year, at a price of $10,000 per coin, there is $6.5 billion in new supply that must be absorbed by new demand in order for prices to remain stable. The amount of new gold issued is a minuscule proportion of the total. Furthermore, issuance will be cut in half next year. So, while both $200 billion and $6.5 billion are not insignificant sums of money to be absorbed by the global economy, Bitcoin will clearly rise much further and faster than gold if demand for safe haven assets surges. Even if nothing changes, gold issuance by mining is expected to increase slightly next year, while Bitcoin issuance is expected to halve. As Bitcoin's meteoric rise continues, breaking new records and surpassing the $1 trillion market capitalization mark in just the last week, more investors are weighing in on the long-standing comparison between the well-known cryptocurrency and another well-known asset class, gold. Experts say both assets are frequently viewed as ways to diversify a portfolio or as a hedge against fiat currency inflation caused by unsustainable fiscal and monetary policies, according to experts. However, until recently, Wall Street analysts, chief executives, and established investors rarely compared the two assets. Bitcoin, also known as digital gold, has long been regarded as a high-risk speculative investment for those seeking quick returns. Gold, on the other hand, has always been regarded as a safe haven asset. As a store of value, Bitcoin is a 100-fold improvement over gold. The rest of the world is catching on and is starting to reprice digital currency in real time. Despite the fact that Bitcoin has increased by hundreds of percent in recent months, it is expected to continue to appreciate in US dollar terms over the next few years. Now, Bitcoin's meteoric rise to over $57,000 per coin, fueled by new investments from Tesla and other institutional investors, has some questioning whether previous assumptions about these assets are correct. As a result, with the creation of coins halving every 4 years or so, the relative upside for Bitcoin is dramatically higher. This means that the price of Bitcoin should react similarly to the price of gold if half of the world's mines were closed every 4 years, and gold output would plummet by nearly 90% after 12 years. From a financial standpoint, the only question is whether Bitcoin is a financial hallucination doomed to fail or a new asset class destined to become part of the investment landscape. If you believe the latter is a strong possibility, the prospects are difficult to dismiss. Hopefully you enjoyed the video? If you want more videos like this, let us know in the comment section below. If you enjoy this video and want to hear from us again, be sure to hit that subscribe button and turn on notifications before you go. Thanks for watching.